Okay, let's try and unpack this. Because if you blinked on May 12th, 2025, wow, you might have missed one of the wildest stock market rides we've seen lately.
Right.
Kindly MD, ticker KDLY. Now, this was, a healthcare services company focused on pain management, opioid dependency reduction. Seemed pretty straightforward.
Yeah, standard operation, you'd think.
Then, boom, May 12th. After closing around, what, $3.90 just a couple of days before, the stock just goes absolutely nuts.
Parabolic is the word. Intraday gains hitting like 400 to 670%.
Just incredible numbers. We saw prices like $22.50, even hitting $30.01 at one point. What on earth triggers that kind of explosion?
Well, that's the core of it, isn't it? It's this radical transformation happening behind the scenes. As you said, Kindly MD was healthcare. But that same day, May 12th, they announced this definitive merger agreement with a company called Nakamoto Holdings, Inc.
Nakamoto Holdings.
Exactly. And this wasn't just, adding a new service. This was a complete pivot, turning Kindly MD into a dedicated Bitcoin treasury vehicle.
Whoa, hang on. From healthcare, pain management, to holding Bitcoin as its main thing.
Yeah.
That's a massive shift.
Seismic is a good word for it. And the person steering the ship, the incoming CEO, is David Bailey.
David Bailey. Now, that name rings a bell for people in the crypto space, right?
Oh, absolutely. He's not a newcomer, very well known, co-founder and CEO of BTC Inc. That's the company behind Bitcoin Magazine, the big Bitcoin conferences.
Right.
He's also a general partner at UTXO Management, and there were reports he even advised a former U.S. president on crypto matters. So this signals real intent.
Definitely. Bringing in someone like Bailey,
Yeah.
it shows they're serious about this Bitcoin direction.
And they're putting serious money behind it, too. There's a huge financing package supporting this whole thing, $710 million.
$710 million.
Yep. Broken down, it's $510 million from a PIPE, that's private investment in public equity, priced at $1.12 in duress a share, plus another $200 million in senior secured convertible notes.
Okay, $710 million is a massive war chest. So let's recap. We've got a company that was, well, maybe struggling a bit. A very prominent Bitcoin figure taking over as CEO and this huge influx of cash. So our mission today really is to dive deep into this sudden pivot.
Exactly.
For anyone trying to get their head around it quickly but thoroughly, we want to understand the why, who are the players, what are the financial implications, and crucially, what are the risks and rewards here?
Consider this your crash course.
Perfect. So where do we start? Maybe with Kindly MD before all this. What was that business actually like?
Good question. Before the merger, they were all about integrated pain management. It wasn't just pills. It involved behavioral health, alternative therapies. They even mentioned medical cannabis.
Okay. And they had physical locations.
They did. 4 outpatient clinics, including what they called the largest alternative pain treatment center in Utah. They were also, trying to be data-driven, personalized care.
And they were getting paid by insurance. That's often a hurdle.
Apparently making good progress there, yeah. Mentioned 80-90% coverage in Utah with the major players. So on the surface, it sounds like, a potentially solid little healthcare business.
Look, sense of butt coming.
Well, the financials tell a bit of a different story, especially leading up to this deal. Q1 2025 figures. Revenue actually dropped significantly, over 30% year over year, down to just under $580,000.
Ouch. That's quite a drop.
And worse, the net loss ballooned, jumped over 260%, hitting $1.04 million for the quarter. Profit margin deeply negative, minus 179%.
Wow.
Negative free cash flow, too, burning through about $625,000. And their cash reserves were getting pretty thin, just $1.14 million left.
Okay, so that paints a much clearer picture. A business facing some serious headwinds, maybe running out of road.
It certainly suggests they might have been looking for, or at least very open to, a dramatic change, a lifeline, perhaps.
Which brings us back to the merger. How did this actually work structurally? You said Nakamoto Holdings.
Right. It's what's called a reverse merger, or a reverse takeover in RTO. Basically, Nakamoto Holdings merges into a subsidiary of Kindly MD. So Nakamoto becomes part of Kindly MD, but because of the terms and the new share structure, Nakamoto's shareholders and management effectively gain control of the publicly listed entity, Kindly MD.
So Kindly MD is essentially the public shell.
Exactly. It's often a faster way for a private company like Nakamoto to go public compared to a traditional IPO. They get the listing, the access to public markets.
Got it. So Nakamoto's in the driver's seat now. What happens to the old healthcare business? You mentioned Tim Pickett was still involved.
The announcement said the legacy operations are intended to continue under Pickett, but let's be realistic.
Yeah.
All the attention, the narrative, and critically, that huge $710 million financing, it's all laser focused on the Bitcoin treasury strategy. The healthcare part seems likely to become, well, a much smaller secondary piece of the puzzle.
Makes sense. The energy is clearly shifting. So let's talk more about the new leader, David Bailey. We know his Bitcoin credentials, BTC Inc., UTXO, the conferences. What makes him suited for this specific role, turning a public company into a Bitcoin vehicle?
Well, his deep immersion in the Bitcoin world is key. Leading Bitcoin Magazine, running those massive conferences, that gives him a huge platform, a network, and frankly, influence within that community.
He can shape the narrative.
Precisely. And his investment background with UTXO shows he's focused on the financial side of Bitcoin too, the reported advisory role. Well, that just adds another layer of connection. He's clearly a passionate advocate with a vision for Bitcoin adoption.
He definitely brings that crypto credibility. The announcement also mentioned a seasoned Bitcoin team joining him, though no specific names yet.
Right, the implication is expertise. And solidifying that control, Nakamoto gets to appoint 6 of the 7 board members. It's very clear who's running the show now.
No question there. But is there a potential risk in his lack of experience running a public company? That's a different beast, isn't it? SEC filings, quarterly calls, Wall Street expectations.
That's a very valid point, and likely one of the key risks here. Navigating the public markets, the regulations, the investor relations side, it's definitely different from running a private media company or an investment fund. It's a significant learning curve.
Something to watch. Now, they keep talking about Bitcoin yield. What exactly does that mean? Is that the new benchmark for success?
That seems to be the core idea, yes. Bitcoin yield, basically, growing the amount of Bitcoin the company holds per share of stock.
Ah, okay. So not traditional earnings per share or revenue growth from operations.
Exactly. It's a shift in focus. Success is defined by accumulating more Bitcoin relative to the outstanding shares. That's the primary metric they want you, the investor, to judge them by.
Interesting. A completely different way of thinking about shareholder value. Okay, so we understand the old business was struggling. We know who's in charge now, and we know the new focus is Bitcoin accumulation. Let's get into the money, into the financial health.
Right.
We mentioned Kindly MD's weak balance sheet before this, low cash, not much in assets. How does that $710 million injection change things?
Dramatically. I mean, going from about $1.1 million in cash to potentially having over $700 million available, it's night and day. It gives them immense firepower to execute this Bitcoin treasury plan.
And you mentioned the PIPE was $510 million at $1.12 a share. Some interesting names involved there.
Yeah, the announcement listed participants like Active, Van Eck, which is a well-known ETF provider that's gotten into crypto,
Right.
and individuals like Adam Back, who's a cypherpunk legend and CEO of Blockstream, and Ricardo Salinas, a Mexican billionaire known for his Bitcoin advocacy.
So backing from both institutional players and crypto veterans, that lends some weight.
It certainly shows significant interest. But, and this is a huge, but you have to consider the impact on the original Kindly MD shareholders.
The dilution.
Massive dilution. That $510 million PIPE at 1.12, that implies something like 455 million new shares or warrants being issued. Compare that to maybe 6 million shares outstanding before the deal.
Wow, okay. So the original holders now own a much, much smaller slice of the pie.
A tiny slice, relatively speaking, and that's just the PIPE.
Yeah.
Then there's the other $200 million.
Right, the convertible notes from Yorkville Advisors.
Yeah.
What are the typical implications there? More potential dilution?
Very likely, yes. Convertible notes, by definition, can be converted into equity later. The terms often depend on the stock price, and financiers like Yorkville sometimes structure these deals in ways that can lead to significant future share issuance, especially if the stock is volatile.
So it provides capital now, but it's like a potential dilution overhang for the future.
Exactly. It's debt that could become stock, adding more shares to the market down the line. So you've got immediate massive dilution from the PIPE and the potential for more dilution from the convertible notes.
Okay. And the company's assets are just completely different now. Forget healthcare clinics. The balance sheet is going to be overwhelmingly Bitcoin.
Precisely. The asset base shifts almost entirely to digital assets.
Which means those traditional metrics, revenue, profit margins from the old business, they become almost irrelevant.
Largely overshadowed, yes. Performance is now tied almost directly to 2 things: the price of Bitcoin and management's ability to execute that Bitcoin yield strategy, basically, how effectively they buy and hold Bitcoin. It's a completely different investment case.
A huge capital injection, a total asset transformation, massive dilution.
Yeah.
Okay, This definitely sets the stage for understanding that wild market reaction we started with.
Absolutely. Which brings us nicely into the second half of our deep dive, market sentiment and what drove that frenzy.
Yeah, let's revisit that crazy surge on May 12th. You highlighted the massive gap between the PIPE price and where the stock traded.
Right, the PIPE investors got in at $1.12, but the market, it bid the price up to $20, $30, even higher momentarily.
That's a huge disconnect. What does that tell you?
It screams speculation, momentum chasing, FOMO, fear of missing out. It wasn't based on a calm, rational analysis of the new business plan, certainly not in those first few hours.
There's so likely a lot of retail traders jumping in on the hype.
Very likely, yes. That kind of explosive, almost vertical move often points towards heavy retail involvement. Fueled by the news, the Bitcoin narrative, Bailey's name, institutions tend to be a bit more measured, waiting for the dust to settle.
And what about the professional analysts? Did Wall Street rush out reports saying, buy, buy, buy?
Interestingly, no, at least not immediately. We didn't see major investment banks issuing coverage right away. And it's worth remembering, according to Investing.com's AI models before the surge, KDLY was already considered overvalued based on its old healthcare metrics.
So the pros were perhaps a bit more cautious, taking a wait-and-see approach.
It seems that way. The initial frenzy felt very sentiment-driven, very much caught up in the story, rather than deep financial analysis.
Okay, a speculative fever. Now let's talk about who actually owns this thing now. The ownership structure must have completely changed.
Completely. Before all this, you had high insider ownership, fairly low institutional holding, and a small public float. Pretty typical for a smaller company like Kindly MD was.
And after the PIPE,
The landscape is redrawn. Those PIPE investors coming in at $1.12 with hundreds of millions of dollars, they effectively become the majority owners because they receive so many shares and warrants.
so the original shareholders got massively diluted, as we discussed. Their percentage ownership just plummeted.
Drastically. But as a result, institutional ownership did increase on paper because you had firms like Van Eck, Arrington Capital, and Yorkville participating in the PIPE.
Right, but these might not all be long-term holders.
That's the question. And Yorkville's role is particularly interesting. They're not just equity holders via the PIPE, they're also major creditors via those $200 million in convertible notes.
Giving them significant influence and potentially even more equity down the road
Yeah.
if those notes convert.
Exactly. It creates a complex structure. And you've also got this potential misalignment, right? You have the PIPE investors who got in super low at $1.12,
Yeah.
and then you have anyone who bought in the open market during that frenzy at $10, $20, $30. Their motivations and break-in points are vastly different.
Yeah, the $1.12 guys might be tempted to sell much sooner than someone who bought at $25.
Right.
That could create selling pressure later on.
It certainly could. Different investor groups with very different cost bases and potential exit timelines.
Okay, so a speculative market,
Yeah.
a radically shifted ownership structure, it all points to significant risk. Let's try and frame this with a SWOT analysis. Strengths, weaknesses, opportunities, threats. What are the core strengths here?
Well, the most obvious strength is the capital. That $710 million upfront is a huge advantage, gives them immediate firepower.
Can't argue with cash.
Then there's the leadership. David Bailey's expertise, his network in the Bitcoin world, that's a major asset. Having the NASDAQ listing is also a strength, providing access to public markets.
And the marketing angle.
Right. That partnership with BTC Inc. gives them a built-in communication channel to the Bitcoin community. And finally, the potential scale, they could quickly become a significant player in the public Bitcoin treasury space because of that initial funding.
Okay, solid strengths. What about the weaknesses? Where are the potential pitfalls?
Number one is probably the unproven model, this Bitcoin yield strategy in a public company context. It's novel and needs to prove it works and that the market buys into it long term.
Execution risk.
Big time. Then there's Bailey's lack of public company CEO experience, which we touched on. The legacy healthcare business could potentially be a drag financially or just as a distraction.
And the dilution.
Huge weakness for anyone holding shares before or buying high. Massive dilution already happened and potentially more to come. And finally, the concentration risk. Everything hinges on Bitcoin.
Right, putting all your eggs in one very volatile basket. Okay, weaknesses noted. What about opportunities? Where's the upside potential?
The biggest opportunity, clearly, is Bitcoin price appreciation. If Bitcoin goes on another major bull run, their assets soar. Simple as that.
Makes sense?
Successfully executing the Bitcoin yield strategy itself is an opportunity if they can demonstrably grow Bitcoin per share that could attract a specific type of investor. Getting a premium valuation relative to their Bitcoin holdings, NAV, could allow them to raise more capital accretively later. They can ride the wave of general institutional interest in Bitcoin, and maybe longer term they could expand into other Bitcoin-related services, leveraging their treasury.
So lots hinges on Bitcoin's price and their execution. Now for the scary part, threats. What could derail this whole venture?
The flip side of the opportunity. A Bitcoin price collapse. That's the existential threat. A sharp downturn would devastate their balance sheet and the entire premise.
Okay, number one threat. Bitcoin price risk. What else?
Regulatory uncertainty. The rules around crypto are still evolving globally, and adverse regulation could hit them hard. Execution failure, simply not managing the treasury effectively or making bad bets. Financing and dilution risks, particularly around those convertible notes if terms are unfavorable or they need more cash later. Security is huge. Protecting those Bitcoin holdings from hacks or theft is paramount.
That's the risk, yeah.
Competition, the other companies are doing similar things, maybe even better. A shift in market sentiment if the hype around Bitcoin or this specific company fades. And finally, broader macroeconomic factors, things like U.S. tariffs, recession fears. Those can impact risk assets, including Bitcoin.
Wow. Okay, that's a comprehensive list of potential dangers. It really underscores that this is not a low-risk play. So let's wrap this up. A brief conclusion summing up the key takeaways from our deep dive.
I think the main takeaway is just how radical this transformation is. Kindly MD is, for all intents and purposes, gone. It's now Nakamoto Holdings, a dedicated Bitcoin treasury vehicle operating within the Kindly MD public shell.
Right, and it's undeniably high risk.
Extremely high risk, but with potentially high rewards if Bitcoin performs well and if management executes flawlessly. Investors absolutely need to grasp the massive dilution that's occurred and the potential for more.
And forget traditional valuation metrics for now.
Mostly, yes. The company itself is telling you to focus on Bitcoin yield growth in Bitcoin per share. That's their definition of success. You have to buy into that specific framework.
So anyone involved needs to be comfortable with Bitcoin's volatility and this unique investment thesis. And constant monitoring is key, right? Bitcoin price, regulatory news, company updates.
Absolutely essential. The story is still unfolding and the landscape could change quickly. It's definitely not a set it and forget it situation.
Which leads us perfectly into our final thought for you, the listener. Given this really unprecedented shift, the huge capital involved, the high-profile leader, but also the massive risks and the volatility of the core asset, is Kindly MD, now effectively Nakamoto Holdings, a glimpse into the future of corporate finance, a groundbreaking innovation.
Or is it more like a high-wire act, a bold gamble with potentially very significant downsides if things go wrong?
It's a fascinating question to ponder as you continue your own exploration of corporate Bitcoin strategies and, well, the future of Bitcoin itself.
Definitely encourage you to keep learning and researching this space. It's constantly evolving.
And if you found this deep dive helpful and want more analyses like it, please do subscribe to the Stock Analytics AI YouTube channel.
And just a final reminder, this discussion was purely for informational purposes. It's not financial advice. Always do your own thorough research and consult with a professional before making any investment decisions.